Thinking of highest returns? How do you invest your hard-earned money? Myself, Bhuvnesh Talwar will tell you about each aspect of ETF. So hello everyone. Today we are going to dive into the fascinating world of exchange traded funds ETF in the Indian stock market. Firstly, what exactly are ETF? Well, think them of as a basket of security, bonds or commodities traded on the stock exchange, just like individual stocks. One of the key features of ETF is their ability to offer investors exposure to a diverse range of assets in a single investment. This diversification can help spread risk and potentially enhance returns. ETF also come with some advantages over traditional mutual fund. They typically have lower expense ratio and are more tax efficient and offer greater flexibility in terms of trading throughout the day. In the Indian market, ETF can broadly categorized into equity ETF, debt ETF and gold ETF, each catering to different investor preference and risk profiles. Now let's briefly touch on how ETF work. When you invest in an ETF, you are essentially buying share of the fund which represent a proportional ownership of the underlying asset held by the fund. The AMU of ETF and index fund stood at 26.6 trillion and 22.13 trillion in March 2024 respectively. This total a passive fund AMU of 78.77 trillion, that is 34 of total equity fund AMU. Total passive AMU rose 34% year over year last year, while equity fund AMU grew 54% in same period.
So any investor has to decide, so whatever money, surplus money he has, where to park that money so that the returns multiply, the wealth is created. Now what options does he have? He can invest in jewelry, he can invest in real estate, he can invest in gold, can invest in equity, can invest in mutual funds. So there are various options, and every option has different type of return and risk profile. So return is one, risk is another, and the liquidity is third. So whenever consciously or unconsciously somebody wants to decide as to where to park his money, then he has to take into consideration risk, return and liquidity profile. Suppose somebody wants to put money in fixed deposit or bonds, the return is fixed. So if 8% yield bond is there, you will get 8%. Whether the interest rates in the market go up to 15% or 5%, you will get 8%. So return is fixed and risk is also fixed depending upon as to what type of financial instrument where you are parking and whether the risk of that the company which is giving that return. Suppose you are investing in RBI bond, the risk is lesser, the interest is lesser. If you are investing in bond of a public sector bank, the return is higher, but the risk also is higher in comparison to RBI bond. And if you are investing in a private fund, then you may get a return of 14%, but the risk is very high. But if you are investing, you want to invest in equity funds and you want to have a higher return, then you also have to take higher risk. If you have the knowledge, if you have the time, if you have the capability, then you should directly invest in equity.
In conclusion, ETF have become an increasing popular investment vehicle in the Indian stock market, offering investors a convenient and cost-efficient and diverse way to participate in various asset classes.
बस अभी 12th खत्म हुई थी और अब आधे से ज्यादा टाइम ये सोचकर निकाल देते हो कि विच करियर टू चूज. वेल, इन दैट केस आई गॉट यू कवर्ड. ये वीडियो एंड तक देखना, क्या पता आई विल जस्ट मेक अप योर माइंड. यू मस्ट हैव थॉट ऑफ कोई बस ऐसा कोर्स मिल जाए जहाँ अनलिमिटेड जॉब ऑप्शंस हो, क्योंकि मैं भी यही सोचती थी. जैसे कि जर्नलिस्ट, न्यूज एंकर, रेडियो जॉकी, स्क्रीन राइटर, वीडियो एडिटर, इवेंट मैनेजर, ग्राफिक डिजाइनर, सिनेमैट, फोटोग्राफर, डायरेक्टर, पब्लिक रिलेशन ऑफिसर, एंटरप्रेन्योर. इनफैक्ट इन सबसे भी ज्यादा जॉब ऑप्शंस चाहिए. तो जस्ट चूज BAJMC एज योर करियर. BAJMC is not just about theory but plenty of practical knowledge too. BAJMC as a course आपको provide करता है world की better understanding, meeting और working with people of top notch industry. और सिर्फ यही नहीं, BAJMC as a course आपको help करता है to grow personally and professionally too. So what are you waiting for? Choose BAJMC क्योंकि इधर आपको मिलेंगी endless possibilities.
Investing in ETF offers several advantages like diversification, low cost, liquidity, transparency, efficiency, accessibility. Overall, investing in ETF can be a convenient and effective way to build a diverse investment portfolio. suited to various investment objectives and risk tolerance. Now let's look at mutual fund. Mutual fund behave like a pool for investor money to invest in a diverse portfolio of assets. However, like ETF, mutual funds are priced once a day after the market closes. An investor can buy or sell share at the day's closing price. Additionally, mutual funds have higher expense ratio compared to ETF.
If you know as to how these sectors are performing, what will be the future, which company shares will go up, which will go down, then you can directly invest in equity. But if you don't have the time or the capability, then you have to take care and help of the mutual funds. You can park your money in a mutual fund. And mutual fund person, because he is a fund manager, is a qualified person, and he knows where to invest, which shares will go up, which sector, and you are expected to know. Then he will take your money, and if you can yourself get a return of 10%, suppose he gives a return of 13% and charges 1% fees, still you are getting 2% additional. So you can park money in mutual funds, and mutual funds are various, so many mutual funds are there. But if you don't want to get into these type of mutual funds where the fund manager has the liberty to rotate into sectors and shares, and you want to get into the ETFs, where the index funds get your money. Suppose you are investing in Sensex or Nifty. So Sensex and Nifty, the composition of the different shares and the company is fixed. So whatever money you give, suppose you park 1 lakh rupees in a ETF and the Reliance Industry has a share of say 13% depending upon the market capitalization in that particular index, then 13% automatically will be parked in Reliance Industry. Suppose ITC has the market capitalization share of 7%. So the fund manager doesn't have a liberty of rotating between the sectors and the shares and small cap, mid cap and large cap companies. So here the fees is also lower, the risk also is lower, and return also may be lower. So depending upon your risk taking capacity and your return expectation, you can decide as to what type of financial instrument you should invest your money, whether fixed income instrument or variable instruments or mutual funds or ETFs or direct shares. So that all depends upon the individual investor who has to decide as to where to park his money.
Now let's discuss about FDs. FDs are a type of investment offered by banks and financial institutions where investors deposit a lump sum of money for a fixed period at a fixed interest rate. FDs are considered low-risk investment and offer guaranteed returns, making them suitable for investors seeking capital preservation and a steady income stream. ETF offer advantages over stock in two situations. First, when the return from stock in the sector has a narrow dispersion around the mean, an ETF might be the best choice. Second, if you are unable to gain an advantage through the knowledge of the company, an ETF is your best choice. In conclusion, each investment option has its own advantage and consideration. ETFs offer liquidity and diversification at a relevant low cost. Mutual fund provides diversification but may have higher expense and liquidity. FD offer guaranteed return but lack liquidity and may have lower risk compared to market-linked investment. Ultimately, the choice between stock, ETF, mutual fund and FD depend on your investment objective, risk tolerance and time horizon. Now let's look at Indian stock market updates and news. Investment by retail investor in small cap scheme of mutual fund has decreased in March 2024. They are preferring options like large cap and exchange traded funds ETF. This information has came to light from the last data of Association of Mutual Fund in India AMFI. Investment in ETF has a new high of rupees 10,500 crore in March 2024. Before this, on an average only rupees 2,500 crore was invested in ETF every month. New fund offering NFO related to ETF are also coming in the market. Mutual fund expert Vijay Mantri says the hotel owner offered only the food which is in demand. When investors started coming in and after seeing the return in the ETF, fund houses also has started bringing NFO. The minister said that ETF mean exchange traded funds and is traded in the stock market like common stock. At last, 6 ETF have given return of more than 80% in last year. This has been a growth of almost 110% in the top most rising funds. Among these, those who invest in government companies are at top, meaning they invest in Nifty PSU. Retail investors have a pronounce on them. The minister believes that it is important for retail investor to first understand the advantages and disadvantages of ETF and then invest. In ETF, many time price difference has to be paid in buy sell. Some experts say that in some cause, risk and complexities ranging from liquidity to speculation are also associated with ETF. That's all for the day. We do not promote any investing strategies or scheme. Do it in your own risk. Thank you for watching Bharati News.
भारती न्यूज़, सीधा, सटीक और निष्पक्ष।